All right. Okay. Modeling assignment. Do we just want to start at the beginning, or are there particular questions that could help us get moving on this? I'll take that as a, let's just get moving. All right. So first, I guess the first question that you all need to answer, and let me share my screen, is how many of you have actually started the template? How are we at the template stage still, or are we starting from pre-template?
I've started with the template, but I don't really know where to go from there.
Okay, so Michael, you have a template. I guess Paul, Alex, who else we got on here? Salea?
Yeah, honestly, I've got it all done. I just am here to make sure I got the right numbers.
All right.
Wow, overachiever Alex here.
I was gonna say, it must be nice, Alex.
Dude, I had a deadline tonight 8:30. Had to have it done so I could check it. All right.
Giddy up. All right. Okay, Salea, where are you at? Do you have the template filled out?
Yeah, I have some of it.
Okay. And then who else we got on here? I can't remember. Who's N?
Nelly.
Of course. Okay. Do you have the template filled out?
I have it, but I have not like fully finished. Yeah.
Okay. So what I would just suggest, and again, you can do that as we talk, you can start filling out the template. And that way you can then come back and listen to the recording maybe and catch up as we kind of go through some of the actual assumptions. But as you all know, if you have the, the Word document, which I have right here, you scroll to Exhibit 4, and that's what you're going to want to kind of duplicate in Excel, right? This is, Exhibit 3. This is what Exhibit 4, as I mentioned. So you all know that. So it sounds like if some of you've gotten to that point, that's good. Okay, then I'm going to lean on the folks that have the template to start kind of guiding the conversation about where we want to spend some time. So I guess, Michael, do you want to kick us off, or Alex, are there particular things you want to double check?
You know what always trips me up is, I mean, this is pretty far into it, but the cash flow.
Oh, okay.
And like, I guess the things that were a little bit sticky for me were the like the capital investments on this one. So like the 110 and the 100,000.
Got it.
I'm assuming those were just like additions to the PP&E.
Yeah.
As negative cash flow.
Yeah. So good question. So maybe
I guess like the main bulk of my question too is they don't get included anywhere else in the P&L other than in the cash flow statement?
No, that's not totally true. So think about it. You're talking about the additions to PP&E, right?
Yeah.
Yep. So this is going to channel your inner accounting. When you buy PP&E, how could you finance PP&E? You would do it in one of two ways, right? One way is you'd pay cash if you had the cash, and that's why it shows up on the cash flow statement, but your accounting credit would be cash out, PP&E in. So there's a balance sheet impact, right? Now, if you had bought that PP&E with credit, let's say you borrowed money, then there would be a few accounting entries in between there, but guess what? You'd still have cash out because you would have borrowed the money, you'd get cash in, you then spend the cash on CapEx. So maybe what we'll do is let's just go back to the case, and maybe this will just help folks getting set up, and I'll just walk you through how I kind of thought about it before I just flash my, before I show you all my numbers. So again, in modeling 101, it's like get your assumptions in, get the template set up, and then really, you're starting on page 6 here is where you're starting to get some assumptions. But as you'll notice, this is where the scenarios are coming in. So let's avoid the scenarios for a minute, and really you're going to scroll down to this component where they start to give you the revenue assumptions. And again, the good news about the model template, if you just copied it, is if you scroll down in the modeling template, and as you'll see here, this is my template. I'll show you all my numbers in a second. There's an assumption section, and you can just copy their line items from top to bottom, the very same line items that they have in the template. And then as you get the assumptions, you just start to fill them in. And that's like a really helpful way to kind of get your modeling mojo going. So that's one tip, get your template, do your color coding for hard codes, and then, as I mentioned, follow their model. They're telling you what all the assumptions are, so start filling those out. Now, if you might recall in my tips and tricks, one of my suggestions was just pick one of the scenarios and model it. And let's get scenario 1 right. And so the scenario that I'm going to start with, again, going back to the assignment, if I scroll, I think to page, I want to say it's page 8. This is where they tell you, I got to enable editing, of course, so I can highlight. Sorry, you have to watch this. This is where they tell you the 4 scenarios. So our B&B business, they're contemplating 4 different things to do with their company. They can add rental space instead of buying it, and they think that that could lead to 15% revenue growth. Or maybe they do the rental space idea, but they don't grow. So they want to model those 2 assumptions. The third and fourth ones are that they decide, hey, instead of renting, let's go buy. And then let's model 15% growth there, and let's model no growth there. So these are your 4 scenarios, but let's just pick the first one, which is additional rental space with 15% revenue growth, okay? All right, so now I'm gonna take you to my model. Ignore all these numbers just for a second, because let's just kind of start with the assumption section. So for those of you at home that haven't built your model yet, this might be a good time to just, create a line that says assumptions and start copying the line items under the assumptions, because that's where we're going to be spending a few minutes before we start connecting. Alex, I know you've done some of this, so just bear with us. So what you'll notice is if you do your assumptions right, and this is again the 15% growth assumption, then going back to my assignment, they tell me my 15% growth assumption, what my unit demand is, and what my price is for 2015 through 2017. So guess what I filled in? I filled it in here, boom, boom. And just so you know, one of the little things I do, a little hack, is I mark the ones that I know are gonna change in my next scenario. So that way when I go to my next scenario, I'm not looking to change everything. I'm just changing the ones that I know will be the ones that are changing in each scenario. So again, I marked this with an X, I got my numbers in there. This is gonna be my revenue assumptions, right? If I look through here, I got my cost of goods sold assumptions. That's easy. I've put them right here, hard-coded in blue. They tell me my sales and expense as a percentage of revenue. I've got them right here. They tell me my variable expense as percentage of sales. Again, I'm just following the lines that they gave me in the model. Boom. Anyway, I'm filling it out, okay? Existing equipment, I think they give that to me right here. Now, keep in mind, this is an important one because this is actually our depreciation expense for the existing equipment. It's not what we're buying. So I've modeled that there, and so on and so forth. All right. I guess this is probably pretty boring for some of you because this part should be the easiest, but I think we can't really move forward unless we get these assumptions in correctly. Any questions about just the assumptions before I keep moving? I know some of you are done and some of you are just getting started. So.
I have some, but go ahead and go all the way through what you're doing, and then I'll get to it in a bit.
Okay. So maybe then, Alex, just for the heck of it, we'll skip ahead. So once you get the assumptions in, and assuming model assignment 1 and model assignment 2, it's starting to work for you, then it's just about connecting all of your line items to those assumptions. And you'll notice that that's what I do. I take my unit demand times my selling price in 2015. That's my 2015 revenue. I take my my number of units and assumptions. Okay, Alex, you wanted to fast forward to where we talk about our cash flow statement and in particular our PP&E. So first of all, what you'll notice is in order to understand how much PP&E you bought, it's actually something that you can reference on your balance sheet. So think about your balance sheet. And again, this is just taking the template that they gave us. You have a balance of property, plant, and equipment. You're going to depreciate it by the amount that they give you. And that leads you to its book value, right? But then if I go into my next year and all of a sudden my balance is $470,185 at the end of the next year, well, the increase from this to this is my capital expense, okay? That, if I'm paying for the property, plant, and equipment in cash, that becomes the difference or the amount. And so what you'll notice in my formula in my cash flow statement is I'm just taking the difference year over year over year over year over year of PP&E in that from those respective time periods. And again, if once you get all your modeling assumptions in here, what you'll notice is that the only other year in scenario 1 where I have an increase in property, plant, and equipment. Oh, wait a minute. Maybe, what did I do here? Oh, they tell me the assumption. And so I've linked my out years to the assumptions that they tell me. So again, going back to, if you go back to the assumptions, if you go to this bullet point here, they tell me that I'm adding 100K of PP&E in 2016. I've filled that in on my assumptions line, and I've just referenced that in my CapEx. So I'll stop there for a minute. Did I answer your question on that one, Alex, or is this actually more confusing?
No, that's making sense. Yeah, so I guess when I originally asked the question, I guess I might have been a little bit misleading because obviously the PP&E will come in the balance sheet under your fixed assets, and then it'll be in your cash flow statement. But I guess the specific question I was asking is that cash spend of $100,000 in 2016 does not appear on the income statement. Is that correct?
Yeah, so good question. So capital expenditure, CapEx as they call it in this model, or PP&E, you can call it whatever you want. It is not an income statement item. The way that you, whenever you buy, it goes to the balance sheet, and the way that you recognize it on the income statement is through, what do you do over time to PP&E?
Oh, you depreciate it and
boom.
Yeah.
Okay, and by the way, in the modeling assumptions that they give you, what you'll notice is that they actually do you a favor. They tell you that it's 100K of PP&E. They tell you that it's depreciating over 10 years for 10K a year. But in the previous assumptions, they actually had stated it here, 10,000 and 10,000, you see it?
Yeah.
And then if you did your modeling right on the new equipment line, you filled it in. And then if you think about your depreciation expense, which I'll go up to here, it's just the, I'm just referencing the sum of those depreciation items. Does that make sense?
Yeah.
Do you want me to do that again, or did you track?
No, I follow you.
Okay, great. Okay, so then yeah, so it should appear on your balance sheet. And you know what I did on my PP&E formula, as you'll notice here. So let's just look at my 2016 balance. I took my end of year balance in 2015. I scroll down and I reference my additions, right? And that's how I get my balance. And then of course that year I'm going to depreciate it. So I referenced my depreciation total. And of course that same depreciation total is going to appear on my income statement right here. And that depreciation total, just to wrap it up, is going to appear on my cash flow statement. So that formula is there is important. It's feeding your balance sheet, your cash flow statement, and your P&L, or your income statement. All right. Any other questions, Alex, that are worth spending a moment on there just for the heck of it while others are kind of templating?
No, I think you've got me covered. I just need to figure out where I've goofed.
Okay. All right. Any questions as people are getting going on this, or that as they're reading through the assumptions, or just any asks that would be helpful for me to start cooking on?
I'm looking at my numbers trying to figure out, because I clearly goofed somewhere, and I'm just trying to figure out.
Let's put it up there, Liz. You're up. Thanks for being our volunteer. Heck
All
yeah.
right.
This will be helpful for others, and it'll be helpful while others are trying to catch up and getting their model set up.
Okay.
Okay.
Okay, so this is my first assumption, and I've done the math, and I tried to mark the ones that I could tell were going wrong.
Okay.
So
hold on.
for instance, yeah.
Okay. So inventory.
Mm-hmm.
Okay. So first of all, and I'm gonna just like save you some pain and agony.
Okay.
So if you actually look in exhibit, wait for it, exhibit 3. So where this is kind of tricky. Oh, actually, it's exhibit 4 as well. So if you were to go to exhibit 4 in the assignment, they actually give you the 2014 numbers. And so anytime you get a model where they give you hard-coded numbers like this one,
Mm-hmm.
I wouldn't try and get formulas on them. I would just
Oh.
hard code the numbers in there. And
See,
that
and
way, go ahead.
I'm sorry. I was trying to make sure the formulas matched. Like I thought the numbers should match, but
Yeah,
no.
so really for 2013 and 14,
Mm-hmm.
don't try and get your assumptions in there. Just hard code it the way that they
Okay.
give you the numbers, and then
Okay.
use your assumptions for 2015 and beyond.
Okay.
For whatever it's worth, and we need to write a letter of complaint to the people who made this case study. If you actually did the math on let me make sure I'm getting this right. Yeah, if you did the math on the 2014 unit demand and average selling price
Mm-hmm.
assumptions, it actually is $2 less than the number that they have in their assumption. So like
Oh, really?
there's little quirks in there, and so don't get caught up in that. Just hard code them. Do the blue stuff that you have in column E in your model. Do that again for column F, and then start your formulas in column G for 2015. And you'll be starting
Okay.
off with the right numbers.
Okay. So let's see. So for instance, is my inventories correct now?
Okay, so let me see. In F is in Frank 7, the model, what do you want to call it? The
The
exhibit is
Uh-huh.
143937. Is that what you have?
Yes.
Okay, so you're good. Then let me see your formula in the next inventory line, G7. You have O3, which is your revenue for that year, times G50. Go down to G50.
G50 is
And that's your inventory as a
as a
percentage of revenue.
8%.
Yep. And if you look back to your Word document case study, the assumption is that, wait for it, ending inventory balance as a percent of sales, which you've done correctly, 8% each year. So you're correct.
Okay. That's funny. Their equation did not give you the right math if you do it on year 14.
Yeah,
Okay.
so that's maybe a little Easter egg surprise for everybody. That's why
Okay.
if a model ever gives you actual numbers in the past, just copy
Mhm.
them and don't try and figure out unless you see some significant error.
Yeah, I figured I just figured if I was setting it up right, then it would match.
Yeah,
Does
yeah,
that make sense?
absolutely. So
Yeah.
yeah, I think you're in good shape. So don't make that blue though. Make those black, right? Because they're formulas.
Those ones, but this
Oh,
one was
yeah,
hard
yeah, yeah.
coded,
Good,
right?
good, good, good,
Okay.
good.
Okay.
Okay.
Let's see. Accounts payable was the same way. I bet the formula is right and
So don't
the
even. So
hard
that's
code.
yeah, that's right. Your 2014 number. Just don't copy the hard code.
Okay.
It's 53286.
Okay. Thank you.
Yep. And so don't try and fix the past. Now your formula in G18. Click on that.
G18.
You've got O3, that year's revenue, times G51. Check that out.
G51. Accounts payable as a percent revenue, 4%.
Perfect. And the assumption in the case study is ending accounts payable as a percentage of sales, 4% for each year. So you're in business.
Okay, cool.
So those
Okay.
can.
Let's do blue for this guy. Okay.
Okay.
Now my balance check is not good.
Right. Yeah. So you still have some work to do. First of all, on your members' equity, like if you read the case, in case you want to read it again,
Yeah.
there is no equity investment being made. So that one's that's going to be you can just say that your 2015 number is going to be equal to your 2014 number, and you just drag that across.
Okay.
So
I wasn't sure how that one worked.
yeah, I mean, if you again, if you read the case study again, which I'm not going to ask you to do that, there was no scenario where they thought about raising additional equity. And so because you read through it and the scenarios are about raising debt to finance the purchase of a building, you can make that assumption that equity is going to be flat, right?
Okay. Okay.
So that's important. And then let's see, I think accrued liabilities, right? There's nothing there. Your bank loan, okay? Again, you're doing scenario 1, which is to add rental space.
Mhm.
You're not going to borrow money for rent. And so in that scenario, your bank loan is not going to, well, actually leave that one blank because you'll want to set this one up the correct way. Well,
Okay.
let's just do it together. Let's do it together. So
Okay.
in the assumptions, can you scroll down for everybody? If you scroll
Yeah.
down to the assumptions and you go to the very bottom of the assumptions, look in line 55, and what you'll notice is that they give you a debt setup. So they say, hey, look, we're
Yeah.
gonna like literally give you line by line what you would want to add to your bank debt, okay? Or to pay off. And so if you actually go back to the case study, and if you look at page, so scroll up just a little bit more.
A little more. Okay.
Keep going to the previous page. Yep. Okay, what you'll notice here is that they talk about the rental scenario. And in the rental scenario, you're going to rent an additional 4,000 square foot facility. This is going to add $30,000 of annual rent expense or cost to the existing annual cost of $45K. What you'll
Mhm.
notice is that in that scenario, you're not borrowing any more money, right?
Oh, okay.
Okay, but
Mhm.
now scroll down for me again, back to the other assumptions. If you go down, what you'll notice here is, keep going a little bit more. What you'll notice here is the second to last round bullet, kind of at the top of the page.
Okay.
Payback of the bank loan in current liabilities at the beginning of 2015.
Yeah, I did not understand what that means.
Okay, so go back to your model.
Okay.
Look at your debt lines in line 56. This is where you would add debt if you were going to borrow more money.
Okay.
In line 57, this is where you would reduce your debt if you're paying off your debt. In line 58, this is where you'd add to long-term debt. So let's assume that it's a long-term liability versus current. And in
Mhm.
59, it would be a reduction to long-term debt. Okay.
Mhm.
Scenario 1, we're renting, we're not buying, therefore we're not borrowing. So lines 56 and 58, you're going to leave those blank. In this scenario, there ain't no additions to bank loans because
Okay.
we're not going to borrow. So you could just 0, 0, 0. And then in line 58, again, there's no current loan, there's no long-term loans, so we're adding. So draw those across, good.
Okay.
Now, what was the assumption in the Word doc about what loan were we going to pay off when?
Let me pull it back up here.
Second to the top bullet right there.
Payback of the bank loan and current liabilities at the beginning of 15.
Okay, good. Okay, so go back to the model. And let's go look to see if there's a bank loan and current liabilities in your balance sheet. So scroll up. Okay, stop right there and look under your current liabilities.
Okay.
Line
Bank
17, good.
loan,
Boom.
15. Okay, so that's 14. Oh,
Yep.
payback. So they're saying they're going to pay that in full?
They're going to pay it all off.
Okay,
Okay.
so this is going to be a 0.
Well, you could do it that way, or the better way to set it up is to
Mhm.
scroll back down to your assumptions. Okay, in the 2015 column, which is column G, in cell 57, because that's 2015,
Mhm.
what are you going to subtract?
Minus the line up there from 2014,
Yeah,
right?
so you might as well just hook it up there because this is going to be an assumption in every scenario. So you might
Mhm.
as well just put it in the assumptions, link it just like you're doing. Good job. Go up,
There we go.
click on that.
That one.
Boom. Hit enter. Okay, now as you see for line 59, there aren't any. I don't think there are any long-term debts in this scenario. You might want to go look under your balance sheet. Are there any long-term debts that you? First of all, the assumptions.
No,
Okay, right.
no long term.
Okay, so then there's nothing to put there. That's zeros. Okay.
Okay.
All right.
Can I ask a quick question about that?
Yeah.
Could the loan on the building be considered a long-term debt?
Yeah. So if you think
Okay.
about it, it's a great question. If you borrow money for a building, and if there's two types of loans. There's loans where you're paying the debt back, the principal back over time, and there's loans where you're paying back all the principal at the end of the term. If the debt's all being paid off at the end of the term, that's a long-term liability because it's not within the year, right? Current, if you remember, is you're going to pay it off within the year. If the debt was something where you're paying back some of it every year, well, whatever you're paying back that year would go in current and the rest would go in long-term. Does that make sense? I'll take that as a yes. Okay, so now Liz.
That's a yes, sorry.
Yeah, good. So now Liz, go back up to your current liability line or your bank loan line. Yep, right there, G20. Now you are just going to put a number in there. But if you want to build this model the right way so that in future scenarios it'll all calculate for you, then you'd want your bank loan balance to be equal to the previous year's balance, right?
So equal this one.
Yep.
Plus
the sum.
Oh, the sum. Okay.
Open parenthesis of those 4 lines that we were just playing with down below.
Oh.
Well, I guess technically, if we wanted to be really accurate, it would be the top 2 lines, line 56 and 57, because that's just the current liability line.
For the current.
Yep. Okay, so perfect.
Oh, whoops.
It wanted you to put an extra parenthesis. So now what just happened to your bank loan that year? It's gone, right?
It's
you paid it
gone.
off. But,
And then I should be able to drag it.
Yes. And what's great about what you just did is in your next scenario, when you do borrow money, your formulas are now set up right. So when you change the assumptions, it's just going to poof right into there.
Okay.
Okay?
Okay, cool.
Okay, so let's just keep working on yours, Liz, because you're the lucky contestant.
Hey, I'm okay with that.
Okay, so right now, if you kind of let's go back up to the top of your balance sheet, and let's just look at the status of where you still have things to fill out. Okay, first, clearly we got to solve for cash. I usually save cash for last or close to last. Okay, your receivables we think are right. Your inventories are right, and you have the right formulas for your line 8, which are just sum formulas, right?
Yeah, they should be.
Perfect. Okay. Then in your fixed assets, now let's spend some time here. Okay.
Okay.
So first, if you go back down to your assumptions, and if you look at, we'll start with line, wait for it, 53, okay? So line 53, in this template, they're literally telling you, hey, this is where you would put any additions to PP&E that you could then link up to your balance sheet, okay? And if you recall, in the rent scenario, you're obviously not going to add any PP&E in the rent scenario, but there's a little curveball. If you go back to the case, Liz, and you've already filled it in here, but just for the sake of those watching from home, the top bullet there is a different assumption. This is not about buying the actual warehouse or whatever the facility is, the building. This is just about buying new equipment. And so you have an assumption here of $100,000 in all 4 scenarios that you're going to need to add to your model. So go back to your model, and it's 2016. You've put that in there, okay? Now, even in your assumptions, I would be using blue and black because there might be some assumptions that are going to be sums and going to be formulas. And I always like to just know what's a formula and what's not. And if anytime you have a hard-coded number, make it blue so that in your next scenario analysis, you know where to look instead of having to go check through every cell. Okay, so you've got your PPE in there. Now go back to your case. Scroll up. And in this model, keep going just a little bit more. Down more.
Sorry.
That's all right. See this depreciation line?
Yeah. Here
is where they're telling you about your depreciation assumptions. Now, the reason the depreciation assumptions matter is because we're working right now on going back to your balance sheet. You don't have to go back, but remember, we're working on the PP&E line item, right?
Right.
So in order to know what a property, plant, and equipment line item is, we need to know what any purchases we make to PP&E are, but we also need to know what's being depreciated. And this section is where we're getting those assumptions. Okay.
Okay. Mm-hmm.
Okay. So what do you see? What they're telling you for depreciation is that the existing stuff you've got is depreciating by these numbers, 95,221 per year. The second line is the building that you're going to buy. But what do we know about the building scenario? Are we working on that right now?
No, we're
Okay, so
renting.
good. So ignore that. And then the new equipment was the number we just put in, right? That $100,000.
Mm-hmm.
And as you can see, it's depreciating by 10,000 per
10.
year.
Mm-hmm.
So what I would do now is that you're going to have to do some kind of flipping back and forth, but maybe we can help you remember the numbers.
I think I could copy it too, maybe.
You could, but Excel makes it hard for you to paste it in. That's the problem.
Okay.
So
Okay.
you can copy one number, but to copy all of them makes it hard. So let's just remember the number 10,000, which you'll note
Okay.
you've already put in H54,
Mm-hmm.
right? So you got that part, and you'll want to highlight those in blue.
Oops.
Perfect.
Okay.
And then don't go anywhere, but just kind of move your cursor up to lines 43 through 45. What do you notice about the labels for those line items?
Existing equipment. Oh, and then the building 30 years. So for this assumption, nothing on the building, right?
Yep, that's exactly right.
But existing equipment is probably going to be copied over from what's in here.
Boom.
Okay. Yeah, I did not quite follow that. So this is the depreciation,
Yep.
and then it's going to be the rent option for existing equipment. Is that how that works?
Nope.
Not
Because
quite. Okay.
those bullets that you're getting distracted above, those are tied to the previous bullet above them, which is the fixed expenses.
Ah, okay.
Okay,
Okay.
so
Yeah.
don't get confused by that high. Look under the depreciation bullet. Those three lines you're seeing there are the exact same lines as your assumption lines.
Okay.
So existing equipment is depreciating 95,221 in 2015. So go to your model, find existing equipment. There it is. And what was it again? 95.
221, was that right?
Yeah, that's right.
And that was for 15, 16, and 17?
That's right. So just drag those across. And because those are hard-coded numbers,
They should all be blue.
make them blue, just in case the next scenario, you're going to be changing those.
Okay.
Now we know the building. There is no building in this scenario, so that's zeros.
0.
And then what was the assumption they're giving you for new equipment?
10,000. So that's the 10,000
Yeah,
on 16 and 17.
Yep. So this one, for whatever reason in this model, they're having you add this twice here because you also put it on line 54, but I would put it here anyway. I would do it.
Would you just type it in, or would you say equals this line?
You could do it either way. So you're thinking the right way.
Okay.
And just that way you only have to put it in one place. Like, that's brilliant. You're starting to think like a modeler. And you keep them black. You keep them black. Yeah, don't worry. Don't be scared. Okay, and then look you already had the formulas in line 46, right?
Yes.
And are those right? Just do a quick check.
Hopefully.
Perfect. Okay, so by the way, what you just did there, I know we were working on PP&E, but what you just did was you calculated your depreciation expense total.
Oh,
right?
yeah.
Okay, and as
So
I
now I
showed,
can plug that in.
yeah, as I showed earlier, the depreciation expense is literally going to feed all of your statements. So why don't you scroll up to the balance sheet first? And they actually have a line 11, that's less depreciation. So you can link that to your sum total down there.
What do I say, equals negative? Because it's less depreciation?
Great question. You can do it either way. You just got to make sure then that your sum formula is reflecting it. So,
okay.
So you make a decision right now. You won't be wrong, but then we'll just need to check what formula you have.
Okay. I'll do negative for now, and then I'll see how it works out.
Perfect.
Because I can take it. Oops.
Oh, don't do that.
That didn't work. That didn't work.
You didn't hit enter on your other formula. So.
No. There we go.
The one thing to note is actually go back up.
Okay.
It looks like our our assumption, our template is telling us the way that they prefer that we do it. Look at the previous year's
Oh,
numbers. Did they go negative or did they do it positive?
no, they did positive.
So
Yeah,
I would just for consistency, I would just do what they do. So,
good idea. Thank you.
yep.
Okay.
Okay.
Equals. Is this good?
All right. And at that point, then you just need to check your formula there below it. And is that see, they're doing the minusing for you. Okay.
Okay,
All right.
cool.
Okay. So you just figured out your depreciation line. Now, what does this mean for your PP&E line? So how would you figure out, this is your puzzle piece, how would you figure out H10? Does anybody want to help us with H10? Or maybe you know it, Liz. How would you get your PP&E for the next year?
Let me see how I set it up before. I added the prior one plus, let's see, G53 additions to PP&E.
That's it.
Is that right?
Yeah.
Okay, cool.
Well, let me make sure. Maybe let me double check, Liz. Maybe I was
Okay.
overconfident.
I'll drag it across and we'll see how it turns out.
Okay, yeah, that's how I did it. So I think you're right. So think about what you just did there. You're saying, hey, I have this PP&E balance from the prior year. It reduces by the amount of depreciation, which is in line G11, which gets me my fixed asset total for the end of that year in line 12. Then at the end of the next year, my balance will have been whatever I had the prior year plus whatever I purchased. But why? Maybe, just maybe, I caught my own error here. Hold on.
Okay.
Shouldn't the less depreciation be the previous year plus the depreciation?
Boom. So, okay, who said that? Was that Saleha?
Yeah.
So I think you're on the right track. What I think you're saying, well, actually say it again, Saleha, just so we all hear it.
The less depreciation should be the previous year's depreciation plus the depreciation that year that you calculated in like below. I don't know where it's.
You're saying, should it be accumulating? Like, should it be adding to itself?
Yeah.
So I think I see where you're coming from. You actually, the depreciation expense in any given year is what would then net against the balance for that year. So
it's
you would.
It's the previous year's depreciation plus the new equipment. That's.
Okay, I think, yeah, then let me try it. So scroll up, Liz.
Okay.
I think Saleha's onto something. If you look at your PP&E balance for 2015, okay, what's your formula right now?
Right now it is the prior year PP&E plus the additions to PP&E.
Okay, Saleha, tell us what you're saying you think it should be in kind of Excel speak. What would you do? Can you see her cells and stuff?
I think her PPE is correct. I'm just saying the less depreciation. It should. I don't think her third number is right on 2015.
The 95,221.
Yeah, because it should be 2014 years depreciation plus the new equipment.
So why are you adding it to the last year's depreciation?
Because
think of the depreciation as what you used of those PP&Es. So I think you're actually on the right track. I think you're just off by one little degree. So Saleha, let's do the thought exercise. You have a PP&E balance. You're going to use it that year, and the usage is represented by the depreciation amount. So once you take that PP&E and you subtract out what you used, the depreciation, you get the new balance, which is in line 12. So that, I think, is where you were onto something. But Liz, in your model then, in G10, you should be starting with the previous year's balance, which was net of depreciation. Yours is before depreciation.
So it should be the total fixed assets in this case, right?
Yes, exactly. So what you you didn't represent the prior year's depreciation in that formula, and then now you are. So now you just need to make sure that that formula that you just inserted is now the formula for your other years.
Okay.
Again, you're starting with the prior year's end balance, then you're adding whatever you buy, and then you're subtracting that year's depreciation, which is what you've now done. So, Saleha, does that make sense? Or do you have questions about that?
Just give me a few minutes. Let me think about this.
Okay. Do you want me to repeat it one more time, or do you want to just?
No. I understand, but I'm just
Okay.
trying to clear it.
Okay, great.
Okay.
All right. Okay, so Liz, what you've just done there is you've now completed your PP&E and depreciation lines of your assets. Okay. Okay. Let's keep working down the balance sheet. And what else do we have left? Accrued liabilities. Is there something that we need to do there? I noticed those are blank.
I don't remember. Let me look here. Inventories.
So scroll down a little bit. There's no assumption for it.
Yeah.
So just blank it out.
Blank. Okay.
Yep, that was just a waste of an Excel line. Now, for whatever it's worth, if you scroll down to your assumptions, you just did zeros across.
Oh, it should be equals, huh?
Well, let's see. Did they give you a line? I'm guessing it's going to be a little lower. So what do you notice in line 52? So you could just do what here? Yeah.
Do zeros and then up there say equals this line.
Yeah, that's right.
Right?
That's right. And for
Okay.
whatever it's worth, for some reason it's dollars in your model. It should be percentages because you'll notice the
Oh,
line.
yeah. Thank you.
Just make those percentages. And then for your model to be really robust, you'll want to link your numbers to that.
Yeah.
Just in case one of the other assumptions is different.
Do you want to take my final with me, Dan?
Yeah, right. Well, I hope that I hope, Liz, is it clicking, or
Yeah.
what I don't
Yeah,
want to happen is you feel like I'm just kind of doing it right now.
Oh, no. It's helping quite a bit. I'm pretty nervous about the final. I feel like I'm going to get stuck on something and it's going to impact everything else.
Well, how about this? We're going to put you through the final test right now. So I want you to articulate to the audience what we just did with the PP&E and depreciation. You're on the spot.
This is my final.
I wish I could say that. But, so why don't you just do it one more time? I know Saleha's thinking through it, but
Okay.
it'll be good for you to try and explain what you just did.
Okay, I'll try to. So I'm going to highlight it so that people can see. So we're taking the prior year's PP&E minus the depreciation, which in this case equals the total fixed assets. It might not always, though,
Yep, right.
depending on what's going to be on these lines. But it's that total minus the depreciation plus any accrual of PP&E for the year in line G, which is in the assumption down here.
That's right.
Does that sound right?
That sounds right. Okay. So just anytime you think of PP&E balance, you've got to think what's depreciating from it and what am I adding to it? You know, I'm gonna buy some PP&E and I'm gonna use some PP&E, and that's what you've just set up there in your formula. Okay.
Awesome. Thank you.
All right.
I'm just linking these guys.
Okay, I'm gonna go to Alex for a minute while you're doing that.
Yep,
Alex,
sounds good.
You've seen some of her numbers and you have your own model. What is there anything that is on your mind right now that we want to take a pause and detour to, or do you want to?
Yeah, I got a real heavy number on my mind, Dan.
Oh, okay. Let's see what you got.
All right, can we look at?
Okay, why don't you
want
stop
me to
sharing?
stop sharing?
Yeah.
Okay.
Sorry, I'm on my phone, so I can't broadcast my screen here, but I'm looking at 2015 net income.
Okay, hold on. All right.
On the income statement.
Yep.
Everything in my model appears to be copacetic and jiving with yours, except for my net income, for some reason, is like $6,000 higher. I have $251,069 on my net income. And I'm looking, the difference is your net interest expense,
Yep,
5959.
Check this out. Ready?
So I'm just curious as to why you have a net interest expense in 2015. Just the way that I read the scenario, they paid off that loan like days T0 at 2015, and I wasn't sure how you calculated how much interest they were paying on that.
All right, so your point is that if you read the modeling assumption, payback, oh, looks like Alex found a nice little, okay, so you're reading it as the loan is being paid back on like day January 1st, the bank opened for some reason, they're paying it off, therefore why would there be interest?
Correct.
I think, my friend, you are correct. So I did it wrong. Now, this is kind of a tricky one. And the reason it's tricky is because at the last day of 2014, you do have a bank loan balance, right? And traditionally in models, unless you know exactly how much interest was paid and when it was paid, you'll oftentimes model the following year's interest expense on the preceding year's loan balance. But because Alex's Sherlock Holmes sleuthness caught that the bank loan was being paid at the beginning of the year, I have then made an assumption error by having a net interest expense of 4%, which I think was the assumption they give us, when in reality that year it is a big fat 0. So what I will do now is I will go here, and now this is a tricky one, and I want to be really clear this is going to be tricky because in future scenarios, we're going to be borrowing money to build. So I got to be thoughtful about what modeling assumptions I'm going to change here so that it doesn't affect my future scenarios. So I'm going to keep my formulas here, and instead I'll go to my interest expense. I'm going to just put a 0 in, and I'm going to hard code it. And okay, so first of all, Alex, thank you. You found a mistake in my model. And I commend you for that.
A
I can sleep
plus.
at night now.
You can sleep, dude. You can sleep. Okay, great catch. Any other questions, Alex, as you've kind of been pondering or reviewing?
Nope. I think we're on the same page.
Okay. All right. What else then? Liz, Michael, Saleha, Paul. Paul's probably wrestling some children right now. Or he's having them do his model if he was a more efficient father.
I can't go after that. I mean, Alex has a mic drop now, right?
Whatever. Paul, so Paul, where are you at? Give us the update, not with your family. I'm talking about on your model.
Oh, so I had only read through the prompt and looked at the template. I hadn't started it, so.
Okay. So are you
But this
starting
is-
on it though? Are you getting through it?
No, I'm on my phone. I was wrangling kids. I had one kid in one arm for the last 15 minutes. So.
Do you want me to just keep going, or are there particular questions that you want to work on?
No, this is fantastic. No, this is very helpful just to watch you walk through it. This will make my life much easier when I'm going to sit down after we're done and do it tonight.
All right. Saleha, anything that's coming to your mind as we're doing this?
No, my numbers are working out, except I don't have questions right now.
But you said except. So where is the model where is it not tying out?
I just messed up, so I'm just clearing that part up.
Do you want to do it real time, or are you up for the task, or do you want me to just keep cruising?
No, just give me a few minutes.
Do it, Saleha. Do it. Come on, Saleha. Come on, do it.
Come on, Saleha. We want you to share your screen.
Please be a team player, Saleha.
We will learn from you.
No,
We're
I
gonna
don't
peer
think
pressure
it's
you into it.
She's like, and my Zoom connection is dropping. All right, we won't put the heat on you then, Saleha, but I certainly want you to feel like you can throw out your questions if there's issues. Okay.
Yeah, no, I will.
Who else then?
Oh, I have more, but
All right,
know.
Liz,
all
share.
right. Yeah, if people aren't going to volunteer, I will totally do it. Okay. All right. So what I'm looking at, what I've got left on the balance sheet is retained earnings
Okay.
and cash. And I feel like this is where I get hung up a lot.
Okay.
And so I'm not, and then I was looking over here and I clearly have questions here too. I made a couple notes of things. Let me see. I didn't understand how to interpret this assumption.
Yeah, so this modeling assignment threw a new term at you, or at least a new assumption type. Thanks, Alex. Great job. And that is that in past models, you had just one fixed expense line, actually, I don't even know if you had a fixed expense line. If you look at your lines 40 and 41, go back down. You had it.
Sorry, my bad.
That's all right.
40
So,
and 41, okay.
Yep. And then you'll notice is the assumptions that they're giving you. One is called variable general and administrative expense as a percentage of revenue, and the line below it is fixed general and administrative expense. So think about this with me for a minute. First of all, what is a general and administrative expense usually on your income statement? Usually you're going to have sales and marketing expense, and you're going to have what's the other one? They have in this assignment there's selling expense and there's depreciation expense, and then there's general and administrative. At a company, what is general and administrative expense?
Like paying your CEOs and stuff? I can't remember.
That's it. I mean, it's paying.
Is that right?
Yeah, I mean, really, it's basically
Okay.
paying everybody who's not, at least in this income statement, everybody who's not sales.
Oh, right.
Okay.
Yeah.
And but it's not just people expenses. What other expenses could go under general and administrative? And by the way, in this scenario, we're thinking about one of those general and administrative expenses.
Rent.
Ding, ding, ding. Okay.
Okay.
Now, to be clear, in line 41, they give you in the case study, they're going to tell you what the general and administrative expenses are by year. So if you go back to your Word document, scroll up a little bit. You're almost there. There, ding, ding, ding. Okay, right in the middle. See general and administrative expense? So they're telling you that the variable expense assumption, 5% of sales, and then they're telling you the fixed portion of that by year in each of the respective options. Okay?
Okay.
So I think you actually, if you go back to your model, now you just need to plug the right numbers in to lines 40 and 41.
Okay.
Line
So
40, I think you did it right? It was 5%.
Right. And this,
Now,
I didn't understand how to interpret it, so I just, yeah. So it sounds like it's just 50 straight across, right?
Well,
675.
yeah, Saleha, say it louder.
675.
Yeah.
So it lists the rent option right underneath. If you go back to the document.
It's actually, it's literally telling you the number right there.
It's down here. Okay. Okay,
And
cool. That's easier.
Where I think you got confused, Liz, is in the line above it. Fixed expenses in both of the options are increasing 50K per year. So you did 50K, then 100K, then 150.
Yep.
But they're doing it for you, but they're just starting with 675, then plus 50, 725, then plus 50, 775.
Okay, cool.
So let's get those numbers in on your fixed G&A line.
Just hard code.
Good catch.
We're almost there, sorry. There we go. Fixed.
Okay, now you remember one of my tips and tricks for you was, first of all, always use the color code.
Right.
And then the other one was, because we're doing scenario modeling, whenever you see an assumption that might change in the other model, you might mark it some way. Okay, X marks the spot.
Yeah, I forgot to do that, but I'll start doing it now.
No, that's all right. So you'll have to go back and do it the hard way, unfortunately, Liz.
Yeah, that's okay.
No,
that's
it's totally okay. And you're gonna be fine. There's not a ton of them. Okay.
And let's see, if I did this right, it should have adjusted up here.
Let's take a look. So what did you do?
I did the prior year plus the 675.
Okay. Any feedback from the crew here?
Maybe it's not plus. I don't know. What do you guys think?
Saleha, I know you're thinking on this one, unless you're working on your model.
For depreciation?
No,
Okay.
she look at her general and administrative fixed
It's
formula.
the same as what you had for you. It's just the same numbers you just entered.
Okay.
Yeah. So remember, on your P&L, and on your income statement, you're not building on the prior year's number like a balance sheet would. So you're
Okay.
just taking that particular year's expense between January 1 and December 31st, which is what you've done now.
Okay.
Okay.
Oh,
Now
and my
this,
depreciation I need to plug in too.
yeah, boom. You know this one. You got this.
Depreciation. And we're doing the totals.
Yep. Okay.
We're getting there.
You are. All right.
I don't think I'm going to be a CPA, Dan.
I disagree. I think you're on your way. Okay. Do me a favor though. Scroll up a little bit.
Yeah. Mm-hmm.
I just want to see your income statement for a second. And I have
Yeah.
just a minor discrepancy, and I want to see why we do.
Okay.
How did you get your 2015 revenue number? Can you click on that for a second?
Yeah.
All right. What did you do there?
I did prior plus the prior times the interest rate, I think. Where was that? Oh, yeah. 15%.
Yeah, that's not the interest rate. That's the growth rate, right?
Or growth rate. Sorry. Yes. Growth rate.
Okay. So let me think here. There's a reason why that's not right. And I'll tell you what it is.
Okay.
Okay, go back to your assumptions in the bubble and B organic case. Now, you technically did the right thing,
Okay.
but you kind of didn't, because they actually tell you, if you scroll right at the top, you see that revenue growth of 15%?
Yeah.
Okay, this is where, again, there's just a little bit tidgy off based on what you did versus what the model's telling you, which is they're telling you the units they're selling, and they're telling you the price per unit. Price times quantity, right?
Oh, man. Okay.
That's your revenue assumption. Go back to the model.
Okay.
And by the way, you were only off by a couple bucks, but it was off enough, and maybe this wouldn't be a deal killer, but so yep, good, equals, go back to your assumptions, and the first few are going to tell you the unit demand and the unit price.
Times.
Okay, do that.
Does that look better?
That looks a lot better, and that's what I got. Okay.
Okay.
Okay. So the good news for you. Oh, go ahead.
So why did they give us this revenue growth of about 15% per year?
Well,
is that
if you actually do the rounding, it was 15% per year. It just wasn't the exact dollars times the exact units. So for all intents and purposes, you probably would have been okay on like a quiz or an exam, because they were effectively the same thing. You were literally off by like $10 versus what I had.
Okay. Interesting. Okay.
Okay, so let's just look at what you got so far. On our balance sheet, we're still cashless. And we still don't have our retained earnings numbered yet.
Right.
What is retained earnings? Like, how do you get a retained earnings balance? Do you remember?
Let me think for a sec.
Think about what is retained earnings. If I'm an owner of a business, I put in my money, that's my equity. And what else would I get that would be kind of mine as the business owner?
The net income?
Yeah, well, with a little asterisk. It's after I pay off all my stuff, the net income's mine. Except there might be one other thing that I might do.
Minus dividends?
Boom.
Or something? Is that right?
Boom. That's it. Okay. So why don't you use that logic to build your formulas for retained earnings?
Okay. Is that do you usually pull it from the cash flow? Because cash flow has the dividends.
Yes.
Okay. Dividends owner draws. Oh yeah, I was reading that, was not sure how to create a thing for it. So net increase in cash, this would not be the cash line, it would be the retained earnings line.
Sorry, where are you at? I'm looking. Oh, okay. So yeah, that's not it. Okay. So you
Yeah,
think about it. You want to,
dividends
where do you find net income?
in right here in the, what
Yep.
is this called again? Income
Income
statement.
statement. Good, good, good. You'll want to know the name of the income statement for the
Yeah.
okay. So you're right. You're going to take your previous year's retained earnings. That's all the money that your business has ever generated that it's kept inside of it, that it hasn't dividended out. You're going to add to it. What did I add this year? I added my net income. This is good. But I paid out some of that net income in the form of dividends. So think about your balance sheet. Cash would have gone out. Therefore, I'm going to reduce my retained earnings by that amount too. So minus dividends. Now you just got to find your dividends. Where are your dividends?
Well, I've got the dividends owner draws.
Okay. Well, you might as well, unless you see somewhere else. I think
No,
there might be, that would be one area. The other might be if you scroll down.
is
I
it an
think
assumption?
it is actually.
Dividends owner draws right there.
Yeah. So you're going to
Okay.
have to fill these out as we go. Be careful which year you're choosing right now.
Oh, thank you. Yeah.
Perfect. Okay. And now we just got to be careful and make sure we fill those things out appropriately. But you have the right formula, right? Think about it. I'm a business
Right.
owner. I generated income. That's for me. And this is retained. It's like, what am I of that net income? What am I keeping or retaining in the business? It's whatever's left after I pay dividends. Okay.
So can you, like, to me, I guess I'm having a hard time differentiating between what retained earnings is and cash. Because to
Yeah.
me, the retained earnings is the cash, but it's, what am I missing?
Yeah. So you're right. And let me think through this so I give you the right answer. The retained earnings increase.
Mm-hmm.
Let me think about this for a second. It's a good question. And if Rick were here, he'd give a really good answer right away. But give me 1 second.
Yeah, you're just fine.
I think it's all accounting. And if you think about your net income, why is your net income? And by the way, the answer is on the just to the right of your cursor, like not just that row, but that whole section. Why is your net income not the same as your cash? Like at the end of the year, why is your net income not equal to the amount of cash? Well, you got them all listed right there, right? Everything you're seeing below that net income line are things that are cash going in or cash going out. So actually, you asked a great question, which is basically, what is a cash flow statement? A cash flow statement is how you're reconciling net income to cash flow.
Okay.
And so guess what? What you're doing in K, 21 through K38 is reconciling what retained earnings is, because retained earnings is net income minus dividends. It's line 21, K21 minus K36. You're reconciling that to cash, really. That's basically what you're doing. We haven't filled in the dividends yet. So
no.
I don't know if that totally makes sense, Liz, but again, this is just the way that the accounting works, is that net income is not always equal to cash. The cash flow statement is how you're reconciling the two. And retained earnings is just a net income minus dividends component. And that's why they're not the same. If you just had a cash flow statement that had net income and minus dividends, then they would be the same thing.
Okay.
But because you have all these other changes to cash, you don't. All right.
Okay.
Okay, so you got your retained earnings formula. All of your balance sheet items are connected, except for your cash, right?
Except cash, right?
Now, just for the heck of it, how would you actually connect your cash formula? Like, let's just get the formula fixed, even if the numbers aren't going to be right. So, where do you get your cash number for 2015?
Is it the final of the cash flow statement here?
Well, what is that line item called in this particular statement?
The net increase or decrease in cash?
Yeah, so is that the balance or is that the change?
The change, so it would be the prior year's cash plus this, right?
Yep, that's it.
Okay.
Okay, so
So
you
equals
could set
this
up the formula if you
plus-
want.
Yeah, thank you.
And then, you know, as we get the cash flow statement worked out, it should work. So
It'll
now, by the
fix
way,
it.
you've got your
Mhm.
balance sheet all straightened up. Why don't you scroll down though? What do you
Mhm.
notice in line 31?
It's not balanced.
It's not balanced. Yeah.
Right.
So we got to
Mhm.
help your cash flow statement out. It's looking pretty sorry over there.
Yeah, it is.
Okay. All right. By the way, we're going to get to the granddaddy component of this model here as we work with Liz through this. So maybe I'll stop at this point. Anybody else have any questions or want to talk about anything else that we've reviewed so far before we move on to cash flow statement?
I don't have anything.
Okay. Saleha, how are you doing over there?
I'm just following along.
Awesome. Okay. Anybody else have any questions or want to stop us before, or do you want to just keep moving along? Y'all are wise for coming here. We're basically going to get at least scenario 1 done, right? And then we just got to figure out how to do scenarios 2 through 4, which should be relatively easy once we're done with scenario 1.
Mm-hmm.
Okay.
Hopefully.
All right, Liz, looks like you're the contestant on The Price is Right, or wrong, however you think
Sweet.
about it. So
Yeah.
let's keep moving. So, all right, why don't we just take a look at your cash flow statement? It looks like you filled in some of it already. So do you want to just kind of give us a quick tour of what you've done, and then?
Yeah, and stop me if I'm wrong on something. So net income, I just carried, oops, from up here because we already had it calculated here.
Good.
The depreciation, I carried from here, but technically that pulls from an assumption, so they're kind of all connected.
Boom.
Okay, working capital. So this guy, I did the change, so decrease or increase, it says in receivables. So I did the prior year minus the current year to get it to be a decrease.
Okay, good. You could have done that a couple ways, but good.
Yeah. And then same thing here. Prior year minus the current year.
Good.
And then the increase, I do it the opposite. I do the current, let's see. So F minus E, so I do the current year minus the prior year. And accrued liabilities, we don't have anything there. Then the cash provided by operations is going to be a sum of all of those.
Boom.
Okay.
Okay. Everybody following? I mean, that's great cash flow magic you just did there.
And then our additions to PPE, let's see, it looks like this was hard-coded.
Yep. Good.
And then this one, let's see if I did this right. G53 is our additions to PP&E.
Yep. Good.
Okay, so that's good. Other investments, unless I missed something, I didn't find anything there.
Well, that's just a header. So that's just like
Oh, that's right. That's
yeah,
right. Okay.
This is actually a great point to call out for everybody.
I should bold
They're indents and that sort of thing. Just be careful about the indents. The indents are meant here to suggest kind of header versus subheader. So you're good. Okay, so what is cash used by investments? I think you hard coded it there, but what would be maybe like that's
Cash
you know
used by investments.
so here I guess actually I'm wondering if you're okay, yeah. So what is the total cash? Think about your cash flow statement. There's 3 components: cash from operations, cash from investments, cash from financing. So in this, what's the right formula to put there?
Is that it? I guess that kind of confuses me because it seems like, oh, is that just the total of what's above it?
Yeah, and you know
Because
what? I
cash
might have given you
provided by investments.
Yeah, so I actually told you the wrong thing. Ironically, the cash additions to PP and other investments are the right line items, and then the line 32 is the sum of those two.
Line 32 is, oh, and because there's no other investments, it's just going to be the same.
Yeah, that's right. And so you
Okay,
just want to make that a
so-
formula.
Okay. Then, so this one's a header. So our additions or reductions to debt. We're not
Okay.
taking out a loan.
Okay, yep. So how would you find this? And this, by the way, harkens back to the beginning of you being on The Price is Wrong. What did we do? What did we do? What assumptions did we fill out to help us get that number? Do you remember? There's basically two ways you can do this one.
Okay, so let's see. Additions to debt. Let me think. So depreciation is not a debt. Liabilities. Oh, these ones down here, right?
Yeah, that's right.
Okay. So would we do, is there a total equity only?
We didn't have a total on this one. Remember doing that sum
Okay.
formula you did where you did the previous balance?
Okay. Okay. So additions or reductions to debt would be equals and then the sum of those 4 lines?
Yep.
Okay.
By the way, what's another way you could have done it? In case right now you're referencing your assumptions. What if you didn't have assumptions here and you needed to figure out changes in debt balance?
Well, we used it up here somewhere too, right?
Yeah, where does debt sit on your balance sheet?
Liabilities.
Good. And what line
So-
item is it?
Total? The total liabilities?
No.
Is that, no.
Remember, this is what is
Bank.
the cash flow item we're trying to figure out? It's cash flow from financing. And
Oh, so bank loan?
yep, that's it. So you could just do what?
Okay. Could
Year over
link it
year.
to the bank loan.
Yeah, but it's changes, right? Because we're trying to figure out if you've
Ah.
either borrowed more money or if you've paid off money. So it would be kind of the change in that balance. You know what I mean?
Yeah, okay, okay. So is this gonna be right? Because yeah, it is. Or
Yeah, that's right. Bingo.
okay, okay, cool.
Okay. Is the company issuing more equity and raising money via equity, cash? Are they getting any cash infusion because of equity?
Because of equity.
Line 35, cell N is in Nancy 35. And if as you
Oh
read
yeah, I can't remember if they had stocks or not.
well, we already actually have the answer in the balance sheet. Where do we see changes in equity on the balance sheet?
And shareholders' equity. Okay, yeah.
Yeah, and is it in the retained earnings part of it, or the members' equity, or the
Mm.
total? And how do we think about that?
I would think it's the members' equity.
Tell me more.
Because retained earnings, well, I mean that is equity,
It
but
is.
the members' equity. So is it going to be the total then?
I don't know, Liz. This is going to be. Well,
Because stock seems like members' equity is more of like member, I think of as stock or shareholder, but
Okay.
the whole this is total shareholder, so retained earnings falls under shareholder.
But what did we just say about what retained earnings is?
Minus it's the net income minus the dividends,
Yeah. So
which is
is
stock,
that is it though?
or it's
Like,
what's paid to stockholders, right?
well, the retained earnings is what's kept in the business. Dividends is what's paid
Right.
to.
Okay,
But
yeah.
but would that is that additional equity? Like is an investor putting more money into the company or getting like is that what they're doing when they're with retained earnings?
No, I guess I've always thought of it as what's left over after, and that's what we just figured, right? It's like,
Yeah. So is there any stock being issued as a part, like what does retained earnings have to do with stock issuance?
okay, because that's what's left over, so
Yeah.
it would be the members' equity.
Okay, boom. So does it make
Okay.
sense, or are you just kind of getting
Yeah.
okay?
No, that I followed that. That made more sense.
Think about if you're a shareholder in a company, you have 3 things going. One is the value of your equity or the equity you're putting in. The second is the dividends you're getting out, or the third is the money that you're letting stay in the business so that the business can keep growing.
Mhm.
All right, now real quick, is that actually the right way to think about it? Is it equal to the member's equity? Because remember, this is a cash flow statement. We want to know, is the company getting money or receiving money from
Oh,
selling
no,
stock?
because it's going to be the change, right?
Yes, boom,
And since there's no change, really, we're going to be at 0.
that's
So
right.
this is going to be equals this minus the prior year.
Perfect.
Okay.
Okay.
I hope this is helping everybody else as much as it's helping me. Thank you.
Well, Liz, they're either going to get tired of you and me, or something else is going to happen. So let's stop there. Any questions so far? Because where we're about to go is going to be, I think, the real challenge in this model. So
Yeah.
are we up to this point? How are we feeling? Paul, Saleha, anybody?
I'm good.
Okay. Michael, how are you doing over there? Are you in it to win it, or are you watching are you watching your favorite show right now?
Watch my favorite show at the moment.
Okay. This is your favorite show? We didn't. Who knew? Okay.
I know. I'm famous.
The Liz modeling show. Okay. You're gonna tell your parents you're a model, and they're gonna be like, but you're gonna think you're a model, you're a modeler. That's
Yeah. Yeah.
He's gonna take over the class.
yeah. Okay. All right. So real quick, before we go to dividends, let's just complete the formulas in the cash flow statement. So
Okay.
so what is we did it. I think we're so far so good. You don't even need to go up there. We've done all of them. Okay.
Just this guy.
Yeah. What's that one? How did you get that? What's that formula?
Cash provided by financing activities is going to be the sum of these guys, right?
Okay. Yeah. Good. You didn't do
Except
some.
I gotta type in sum here, but
Good.
and then net increase in cash. I'm trying to remember. Is it the sum of these 3?
Boom. What are the 3?
So it's going to be the cash, the total cash provided by operations,
Good.
the cash provided by investments,
Boom.
and the cash provided by financing activities.
Boom. Okay.
Okay.
Okay. So why don't you get that kind of stretched?
Okay.
All right.
Now I have a thought on this. Can I tell you my thought?
I would love to hear your thought.
Okay, and then you tell me how wrong I am. So, my thought, hopefully other people, you can plug your ears so I don't mess you up. So my thought on it was to do an if statement
Okay.
and say basically that cash, so the total's got to equal 225, right? Because
Yep.
the 50 plus 175, so if 50 is going to be remaining, so I would say if the total is greater than 225, then this cell equals 175. If it's less than, then it equals 0.
Okay. I think you're onto it. So let's see you do what you got here. Let's see what you got here.
Okay. So did I actually plug it in here? No. So I did
Now,
equals.
can I give you just a one little mini piece of advice?
Yes. Yes.
So I like where you're going. I think your head's in the right place. Sometimes there's little breadcrumb clues that, at least in this respective assignment, the business owners gave you, and they gave you this assumptions section. And
yes.
so think about your assumptions section for a minute, because you actually, for some reason, go to the bottom, they included a dividends assumption. Okay. And the reason I think this is important is because you might want to actually do your calculations there, and
I
then
did.
have that feed into your dividend line 36.
Okay. I forgot that I had already done it. I did this a couple days ago. So that's what I did. Let me see. Why did I do 222? I think that's supposed to be zeros. So I said now let's look at what E is real quick. If E5, so is it supposed to be the cash? Maybe that's runner draws each year. If the ending cash balance will remain over 50. So I said if the cash is greater than 225, which is that total of the 175 plus the 50, is if it's greater than that, then we're gonna draw 175, and I've said that it would be a negative because we're taking it out.
Okay.
So it's a decrease in cash. And then if it's less, so if it's not true, then it's 0. Am I close?
I think you're actually really close, but I think, what is E5 again?
E5 is the cash
But which
balance.
year?
Oh, I had the wrong year, huh?
Yeah, why don't you play around with that for a minute and let's see what happens here. I think you're close. You and I might have done it a little differently. Oh, okay, hold on. No, maybe not. No.
Okay.
Yes. You're right. You don't want it to be 2013's
Because it would
cash
be
balance.
yeah. So it would be F5.
Yeah.
So let's try dragging that across.
Okay.
Oh no! I hate when
No.
that happens.
Okay.
Hey, what version of Excel is this? I've never seen it show a circular formula like that.
I haven't either. This is the one from Westminster. It's
So
Oh, wow,
you,
that's
there's a
Uh,
way.
I
It sets.
have
It's set.
showed that also.
Yeah. This sets it up for you. Okay. So do me a favor. Go to line 36 and go to N as in Nancy 36. So in your cash flow statement, what is that right? What is that right now?
That is equals F61.
Okay, so it's referencing your dividends, and then it's feeding your cash. Okay, got it. So, okay, so can I let me just throw an idea. Hold on, let me just see.
Yeah.
So circular references are kind of the devil, as I like to say.
Yes. Yes.
And so you can do one of two things. You can work with a circular reference, or you can figure out how to break out of the circular reference. So do you mind if I share my screen for a minute, Liz, and show you how I thought about this?
No, that would be great. Thank you.
Okay. All right. So for those listening at home, this is going to be the crux of this is the hardest component. Now, what you've heard me say in our tips and tricks is that you need to figure out what's the solve. What are you solving for in the model? In this model, Liz has done it all. She's connected everything. She's got cash solved for. The question that they're asking and the curveball of the model is, should you pay dividends or not? Okay, that's what we're that's really the question. Because if we pay dividends, that's going to change cash. If we don't pay dividends, that's going to affect cash, right? So I did something that might be rogue. It might be, our friends at B&B didn't help us with this, but let me show you what I did. And you'll see it here in my model, right beneath my cash flow statement. I just wrote myself a question. I said, should I pay the dividend or not? All right. And what I did was I took the beginning of the year's cash from 2014, 15, 16, 17. So again, I'll say, hey, what did I start the year with when I started my operation? And what I decided to do was I wanted to say, hey, let's just forget dividends for a second. How much cash would I generate or not in this business before I even think about a dividend? Okay. So look at what I did here. I said, let's look at my cash flow from operations. That's like, hey, what did my business spit off this year? Let's look at my cash flow from investments. Did I invest this year or not? And then let's add up all my financing cash flows except for the dividends. And let's just see what I've got at that point in time. And in this instance, before I decide whether I'm going to pay a dividend or not, I say, what did I have at the beginning of the year cash? And then I say, what did my business generate this year in cash minus the dividends? Because I don't know if I'm paying the dividends yet. Guess what? This year, the business generated $218,008. Using Liz's logic, you had the logic right, Liz, right? You said,
Mm-hmm.
hey, if I take that number and I subtract 175K, do I have more than 50 or not? Right? That was what you kept saying. And what was the minimum
Yeah.
you said we had to be at?
225 total.
Okay, good. So in 2014, what's it telling us? Even without even doing an if formula, would I pay a dividend in 2014? Well, this is kind of tricky because guess what? 2014. All right, Liz, this is another one of those things where in the actual homework, and if you go back to their template,
Mm-hmm.
2014 doesn't really count. It's like at the beginning. Remember how you built the
Yeah.
formulas? Guess what?
Yeah.
2014, they have 175K dividend baked in here, even though they didn't keep their balance. So ignore 2014 because it's already happened. Let's move on to 2015, right? And so just to repeat, I say, what was my cash at the beginning of the year? So I go to my balance sheet. My cash at 12/31 of 2014 was $43,000. Okay. Then I say, how much cash did the business generate this year from operating, from investments, and from my financing activities, excluding dividends? And what I get is that before I make this dividend decision, this business generated $233,000. So Liz, using your logic of 225, would we pay a dividend this year?
Yes.
We would. And so what I did here was I say, hey, am I going to pay 175K in dividends this year, or am I going to pay 0? And I did an if function, just like you said, Liz. If my cash flow before dividends minus 175, why did I say minus 175? Oh, because that's the dividend amount, is greater than or equal to 50,000, then pay the dividend. Otherwise, don't. So let me repeat that, because Liz, is this making sense, or am I?
I'm getting there. I
Okay.
think so. I might need a little bit of a
Okay.
walkthrough again, but
All right. So we'll try it one more time, and I'll do it, and I think this will help. So if you're trying to figure out what your cash balance is before paying dividends, this would be the way to do it. You'd say, what did I start the year with in cash? $43,000, referencing my balance sheet. And then I would say, and what cash is the business generating this year before I think about dividends? And again, just to repeat what I've done in this formula is I've said cash from operations total, $349,000, cash from investments, 0, cash from financing activities except for dividends, because I don't know if I'm paying dividends yet. So I reduced my debt. I didn't issue any stock. So before I make the dividend decision, in aggregate, I now have $233,000 of cash. So what I do then is I say, what's my decision? Well, Liz, you already know the number. You know it's 225. So we could set this formula up in a couple different ways. The better way to probably do it is equals if this is greater than 225,000, then minus 75,000, otherwise 0, right?
and 175, right?
Thank you.
Mm-hmm.
And then what I got here is in 2015, it's telling me that I have enough money to pay a dividend. Okay?
Okay.
So guess what? If I know based on this that I can pay a dividend, then what I do here, and I guess I probably could have done this a little better. I put the same formula down here. So this line 44 is basically the same line as my dividends assumption. I just wanted it to be a little closer. So just to reiterate, equals if this number is greater than 225,000, then pay the dividend. Otherwise, don't. And I'm just going to paste that across. And then what I'm going to do, I'm going to link my cash flow statement. And guess what? I just avoided a circular reference. And I got my dividend calculations right.
Okay.
I sense, Liz, that you're not quite there yet.
No, I think I'm about there. I think so. I'm just looking at so should I pay a dividend? Then you have the beginning cash, and then you add in the ones from the income statement.
not income
to get your
statement.
total. Or the cash flow. Sorry,
Yep,
cash flow.
yep. But what was the distinction? Because remember, we're actually trying to solve for one of the cash flow line items, dividends, right? We're trying to figure
Right.
out, should we pay it or not? So the challenge is that you did the logic right, but it creates the big circular reference. So all I'm doing is I'm trying to kind of split it out. I'm trying to say, hey, let's calculate this thing outside of the cash flow statement for a minute, and that way I can avoid issues if I need to. So what I did here was I just said, start my year with my cash, generate cash for the business. What do I got left? 233. And then for my assumptions, I'm just saying, well, is that number greater than 225K? Because if it is, I can pay 175. If it's not,
Right.
then I'm not going to. And then I just need to link that assumption number to my cash flow statement.
Okay. So I was just not adding in I was just going off that cash line instead of adding in the cash flow statement items. So
You were going
okay.
off of, wait, hold on, let me see it. So let's take a look. Why don't you pop it up there and let's
Okay.
just make sure we're good.
Yeah.
And again, see, there's a way to actually do it with the, you got my face, it's gonna be stuck on your Word doc, Liz.
I know.
Okay. All right.
So
So
because
what I would
yeah,
do,
what I
oh, go ahead.
oh, I was gonna say what I did is because it was saying if the ending cash balance will remain over 50, I hadn't added in these the amounts that you had here. Does
Yeah,
that
so
make sense?
just for what it's worth, well, yeah, so this is the trickiest part of this model. And like I said, there's a way to do it with circular references, but I like to just avoid them completely. So what I would do is I would go down to your dividend assumption line at the very bottom, and I would just delete it for a second. Let's just get rid of this ugly circular reference, line 61, yeah. Okay. And then look at the formula in O36 again, just your dividends on your cash flow statement. Is it linked to those assumptions? Okay, good. So,
Yes. Mm-hmm.
and then, all right. Okay, and then let's just take a look really quick at your cash flow statement again. Can you scroll up a little bit?
Yeah.
Okay, I just want to do a little ticking and tying here. 95,221, 5328, 1928, 349, 9. We are off by $1 or $2 for some reason, but we won't lose sleep over that yet. Okay. Okay. All right. So I think you and I are we're pretty close here. Okay.
Okay.
So
So I
before
should
you've done any dividends, before you've done any dividend payments, what I want you to do, let's just do it another way, just for the heck of it.
okay.
Why don't in line 40 and cell M as in Matt 40, just write beginning cash balance. Okay. And then in the cells next to it, just link to the balance sheet what your beginning of the year's cash balance was. So you're in 2014.
So the beginning of the year would be that's a
It
balance
would
sheet,
be
so
that.
that's
No, you're right. Would be the end of the
okay.
previous year, right?
Okay.
Okay. And then just drag that across. Okay, great. So this is what you're starting with. Now we need to figure out what are we going to end with, right?
Mm-hmm.
And so right now you don't have any dividends being paid, right? You haven't put any
Right.
dividends in yet. So you theoretically, if you look in line 38, cell O38, O38 is telling you in 2015, your business is generating $190,331, right? And again,
Right.
we
Uh-huh.
haven't figured out the dividends yet. So if I started the year with O40, $43,000, right? And if I
Mm-hmm.
add during the year $190,331, how much money do I have at that point in time? Maybe right below it in O41. Why don't you just add those two numbers together? What you started the year with plus what you generated in that year. Okay. Now,
Okay.
Okay, so that number's telling me, based on what you already know in your heart and mind, you know, Liz, that if you have 225K, you're paying the dividend.
A dividend, right? Mm-hmm.
Okay, so now for what it's worth, you can either create some fancy if statements, and you can do what we were talking about doing, or you could eyeball this, and you could say, oh, if 233 is greater than 225, I'm paying it, and you could hard code 175 in. That's another way you could do it.
Okay.
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 Now, by the way, if you hard code 175 in, watch what happens. So put 175K into O36.
And it changes these.
Yeah, by the way,
Mm-hmm.
you got to make the dividend number negative. And
Oh, right.
you'll also need to do that in N as in Nancy 36. But check your formulas then, because
Well, these should go with the assumptions, right? Is what I should code it to be.
But tell me how look at your formula in N as in Nancy 37. Just do me a favor on that total for financing activities. How did you do that one?
Total for financing. N was the
You just hard coded it?
That's hard coded,
okay.
Yeah.
All right, then that's fine. But the 175 should be negative because it's an outflow of cash, right?
Mm-hmm. Yeah.
Okay, so that was throwing me off for a minute. Okay.
Sorry.
No, that's okay. But look, by the way, when you put that 175 in O36, which you should make blue because you hard coded it, what happened to O41? It went down by
decreased.
175. But is it still above 50? Is it above 50?
It's still above 50. Yep.
All right, you're in business. So this is another kind of manual way to do it without having to do if statements.
Okay.
So why don't you try it? The other two, are they both above 225? Okay, so hard code away and just make them blue, because in your next scenarios, you might not be doing it this way. You know what I'm saying?
Yeah.
Okay, so make those blue. And look, you still have plenty of cash left over, right?
Right.
In O40 or in line 42. Okay.
So this would be ending cash balance?
Not really. This would be your actually it's ending cash. Well, because of the way that we did it here, it is ending cash balance. Is it? Let's just double check. It should be ending cash balance. I'm pretty sure it should.
Because does it match? Yeah, because it matches the it matches these.
All right, so now we have a little minor challenge with yours right now because your balance sheet is not balancing.
Right.
And at this point, we have completed everything. So I think I know where it is, and I've already found it. I've already identified the error, or at least one of them. So, Liz, look at your cash flow statement.
Okay.
And just take a look at your additions to PP&E. Okay, that's right. That's what they told you. No, you're right. You go back over there. Go back to your cash flow statement.
Okay.
Your N as in Nancy 30 is right because they just told you that.
That's coded right.
Yeah, but look at the number in P as in Pat 30. What is that telling you? When you add PP&E,
you're losing that money, right?
Your cash is going out. So you made this a positive number. This should be a negative number, right?
Okay. Yep, that makes sense. So H53 should be a negative.
Now be careful, because if you change that, your balance sheet might be running off of that number. So if you change that, if you change that to negative, you might. Well, but maybe that might actually solve it for us. Let's actually.
Should we take a look?
Yeah.
Should we try it?
Let's see it. Let's try it. Okay. My guess is that what. Yeah, because I think your PP&E balance sheet was tied to the positive number. So why don't you go back to your cash flow and just change that number to negative because it's an outflow. So make P as in Pat 29, is it? Or 30? 30.
Is it this one?
Yep.
Okay.
Just make that negative because it's cash outflow. And by the way, that should then flow through to your balance sheet. So that's one. Okay. That's one step. Let's see what else. All right. Bear with me. I'm just kind of doing a quick spot check.
Yeah, yeah, you're good.
So I think your cash flow statement's in pretty good shape here. There must be
Okay.
something else that's cooking or not cooking.
Oh, I'm so glad I have you right now because when I get to this point, I have no idea what to do except start over.
Okay, so do me a favor. Something's fishy on your cash in 2016. So tell me, click on that cash line again, H5.
Mhm.
And how are you getting that number?
That is coming from
The prior year's cash. Thanks, Paul.
prior year plus
That year's
oh,
cash generation.
so
You got 13,908 there.
oh, okay, yeah.
And for some reason, 13,908. I found it. Okay, Liz. Ding, ding, ding. This is where models are so much fun. Okay,
Uh-huh.
I want you to just start at the top of your net income statement, or your cash flow statement, just line by line. Promise it won't take long, and just check your formulas.
Okay.
Anything crazy on the net income line?
I don't think so.
Yeah, that
'Cause
one's
that
pretty.
should just pull.
Yep. Okay.
That one should be good.
Let's go to your next one.
Depreciation should just be pulling from
Okay.
depreciation up above.
Okay, but hold on. Just kind of take a
Okay.
look at your next year.
Oh, where's that one pulling from?
I don't know.
H54.
You just found some cell somewhere. I think you just
Oh, I
connected
had
it.
it pulling down there.
Yeah, you just did the
Okay.
PP&E. Remember, there was more than just the PP&E. There was the existing stuff too. So, okay. All right. So that's a step in the right direction. Now, this is the sleuthing that we're doing here. So now, I think you're good there. You're good there. Boom. Hold on. 473. Okay, good. PP&E, good. Investments, good. Increase, decrease, 109, 298. 50. Okay, so I'm getting the same numbers there. Okay, can you go to the balance sheet again?
Yeah.
Just scroll to the top. Okay. Okay, so I think your asset side is good. Now let's
Okay.
take a gander at your liabilities. Okay. Something's up with your retained earnings line.
Ah, okay.
I'm guessing that your dividends were negative in one place and positive in another or something.
Maybe so. Let's
All
see.
right.
So what my formula, is that what you're wanting to see?
I think
The
so.
formula?
So walk me through it. What do you got? You got your
Okay.
previous
So
year's
I've got
retained earnings.
previous year plus the net income
Yep.
minus, let's see, G61 minus dividends. Oh, but this is not showing up over here yet.
So let's just link your dividends there.
Yeah. Okay. And we know that it was 175
Yeah, you could just link it to your cash
negative.
flow statement. I would just link it to your cash flow statement since that's where you hard coded.
Oh, okay.
And then just drag it across. But keep in mind how you wrote your retained earnings formula. Go back up. Did you minus a minus?
I think so. Yeah, so plus now.
Watch your balance number. Oh, baby.
Now pull across.
All right, look.
$2.
You're off by $2, Liz. I don't know what to tell you, but like we're gonna just call that a day.
All right.
Like my guess is, and I'm just looking here because I did notice you're off by just a couple bucks. Can you go to the top of your income statement?
Remember, I did some of the equations for these ones that they had given us numbers for that were really close, but not quite.
Yeah, but I don't think that's where it's at actually. I think it's,
No? Okay.
I'm looking 297. I mean, this is such a minor little nitpick, so sorry. This is just me being a perfectionist, I think.
Oh, I'm the same way. I get it. Thank you.
Hold on. 069. Man, this is so much fun, I'm sure, for you. Let's see. Okay. It's in your change in receivables line for some reason. We're off by like $1 in 2015.
Change in receivables.
Sorry. M as in Matt, 24.
Oh, okay.
Your 2015 number. Can you just show me that?
Yeah.
That's your change in AR, right?
Mm-hmm.
And then tell me how you got your AR number for 2014, 35. Oh, you know what? You're off by $2 and F is in Frank 6. That's it.
Really?
You did remember this was back our first thing. This is the hard coded. This should be a hard coded number.
This should be hard coded, and I did the
35,
calculation, and it was $2
525.
off.
Yeah, 35,
Okay.
525.
Okay.
So just
That is so silly.
Okay. All right, Liz. So
Awesome.
you now
Thank
have
you.
about, okay. So here's the thing, and we have 8 minutes left. And Liz, we are gonna just take this to the promised land. Everybody else was a great spectator in today's reality show of Liz's MBA finance journey. So here's the concluding tip and trick, and this is always the reward for people who stay. First of all, you saw how we calculated the dividend. That is the trickiest component of this model. The second tricky component is now you have to do the other 3 scenarios, okay?
Mm-hmm.
So first of all, I would always save your spreadsheet if you haven't already, just in case Excel decides to be weird, always save. Then I would make a copy of this tab. So if you right click, you duplicate, or what do they call it? Copy.
Move or copy.
Yep, click
and
the,
then I'm
and then hit create a copy below.
And
oh, not yet. Do the
create copy.
Yep.
Thank you. Yeah.
Okay. So what I would do here is then, if you go back to the Word doc, the second scenario is rental option no growth.
No growth.
Okay, so I would rename the tab. And I would you can keep it all the same.
Oh, okay. I'll fix it in a bit.
Yep, that's no big deal.
Since we're running out of time.
Again, that's just me being a perfectionist. And then think about it. In this scenario, what's the only change? You're renting.
This assumption of growth changed to zeros?
Yeah, but remember, what did you do? You changed your revenue formulas to not drive off of that. Do you remember that?
Yeah.
You did it off of the quantity and the price. So go back to the model, or go back to the case. And scroll up a little bit. And guess what the case did for you? You keep going.
Oh.
Keep going.
Give me.
Keep going. Boom.
No growth.
No growth. They tell you the quantity and they tell you the price. So just make sure your assumptions have the updates for unit demand and average price. So it's 126,869. So go to your model and go to
126,869 all the way across.
Yep. And guess what you just did?
That's it?
Nope. Because remember
okay.
the dividend question. So because in this scenario you're not growing, take a look at what happened to the lines you added in line 40 and 41. You had the right link to the beginning cash, so look at O40. You did the right thing there.
Mm-hmm.
But look at your cash balance because you're paying dividends in this scenario.
Oh, so no dividends.
No bueno. So delete that one first. Go 0. Go to the next cell. Okay. Now let's look at the next year. Do you have 50 million ending balance?
Nope.
What are you going to do?
Delete it.
Okay. Now look at year 4 or whatever year this is.
Yeah.
Do you
Nope.
have more than oh
Oh, because it's above 50, right?
yes.
It's not the
Yep.
225. So yes, in this one.
Okay. Boom. Okay. So guess what you've just
Okay.
done? You've just
The
finished this
second
scenario.
tab.
Second scenario,
Sweet.
done. So again, key thing between the rental assumptions is you're just going to change the growth and you're going to change the dividends. Now, you might double check that. Let's just actually do a quick look. Let me look at
Okay.
mine because there might have been some other assumptions that changed that I forgot about, but maybe I can just give you a little thumbs up. I think we're balancing out. Go to your cash. Let's see. I'm looking here. Okay, our cash numbers are a little different. Maybe there's something else. There's another scenario that we weren't thinking about in the rent no growth. So we might need to go back to our case study and just review if there was something else in the no growth scenario. We changed the revenue assumptions. We're not borrowing any more money.
It's the same amounts.
Like you, we have the dividend payment. We're tied out there in the last year. Oh, I know what I did wrong. Hold on. I did the interest payment. Let's see. Can you put your model up again for me?
Yeah.
Okay, and then scroll. Okay, you're at the top. Okay, so 113,375, 45,807. Okay, I think you and I are in a good spot. I think we're tied out.
Okay.
Okay, so scenario 2, that was easy.
Yeah.
All right, so
you copied this one or the prior one?
I would always start with my first one just because that's
Okay.
the one you spend all the time on and you feel so good about it, you just want to see it again.
Yes.
Make sure you create a copy.
Move
Okay.
to the end.
All right. Okay, now what's the scenario here? Do we, what is the case telling us that they're considering?
Purchasing a building
And?
with 15% growth.
Okay.
Which
So,
we've already got the growth
Yep.
stuff correct because
Which
we
was why it
copied
was
that
smart to copy the first
scenario.
one. Okay, good. So then start at the top of your assumptions, or go back to the case. You'll just want to start at the top of, keep going up a little bit. And right about there. And this is where you're going to start reviewing the assumptions for the building scenario. Okay, so what are they telling you in the building scenario? What are you going to do?
Take out a bank loan.
Okay.
Well, I'm assuming.
Yep.
Borrow $990 for the building for 20 years at 5% all fee included interest rate.
Okay. And what else are they telling you?
The loan is fixed at 5% with a 90% loan to value ratio.
Oh, you know what? Actually, that's interesting. They bring that up. Loan guarantee.
Okay.
Okay. All right. So let's see here. Actually, it's funny that now that I'm reading this, I'm realizing I might have done something a little incorrect. So let me get there for 1 second, and then I will share a few thoughts with you. Okay.
Okay. Do you want to share your screen?
Yeah, maybe I'll do that.
Okay. I'll stop sharing.
Okay, so let me put mine up. We might go over a minute. Hopefully that's okay. Okay, so I'm in my scenario 3, buy 15%, grow. So we're buying a building, it's growing 15%. So I've got my revenue assumptions in there. Let's just scroll down a little bit here to my additions to PP&E. Okay.
All right.
Bless you. So
Thank you.
where I already know that I made a mistake, so we'll make the fix in real time, is this little curveball where they say the building is going to be a $1.1 million building, right?
Oh, right.
But it's a 90% loan to value, meaning that if the building's worth 1.1, you're only going to borrow 90% of it. So let's go back here. What you'll notice is that in the additions to PP&E line, I added 990,000. Is that correct?
No.
What is the actual addition to PP&E?
The actual addition would be the 1,100,000, right?
Yeah, the value of the building, right?
Mm-hmm.
So I've got that in here. Then the debt addition, though, is the 990, right? So again, if you think about the assumptions here, we already knew that we were paying off the short-term bank loan. That's not changing. But we are going to add debt to our balance sheet to pay for the building. And the amount of the debt is 990,000. Okay, so I'm going to make that assumption in E56. And then, as you'll note, they're telling me for financial modeling purposes what the total amount every year of principal and interest that I would pay is. And then they split it out for me here. The interest amount and the principal amount. So I'm going to go back to my assumptions. And here it says reductions to long-term debt. Every year, I'm going to pay off $29,940 of principal in the first year, $31,437 in the second, and $33,009 in the third, which you'll note I've done here. Now, because you built your model robustly enough, those numbers should then flow into your debt numbers and into your PP&E numbers, right? But there's one other little filler, and if you read through all the scenarios and these assumptions, we know we have a change to our G&A expenses in the buy option, and we also know that we have additional depreciation in the buy option. So I've got to go find those assumptions here. First was my fixed G&A expense, and I got to change that line as it notes here, 600, 650, and 700. Because just to remind yourself, we're not paying rent anymore. So my fixed expenses have gone down by the rent amount, right? So 600, 650, 700, 600, 650, 700. I also, because I'm in the buy option, have to depreciate the new building, and they tell me the depreciation expense amounts. So as you'll note here, I've added it here. Just as a reminder, once again, as you'll note what I did, I added little X's next to the assumptions that I knew were going to change based on the scenario. And that way, when I created the tab here, those X's were there, and I don't have to do anything other than go to the X lines and change them. And that's the brilliance of doing it that way, if I must say so myself. Okay, so at this point, I've made all the changes except for one, which is the interest expense that they told me about. So I have my interest expense. Where does interest expense go?
The income statement.
Exactly. And so what I have here is my interest expense. This is wrong because of what Alex taught us. So my interest expense, 49,500, 48,003, 46,431. I'm just filling them in. And then I'm in business. I got my interest expense. It gets me my net income. Now I just need to go down, and Liz, at this point, you would go do your dividend check again.
Okay.
We did on the first two scenarios, and assuming your dividend check works out, and as you'll note here, you know, at least in my formulas, we are going to pay some, but that's it. And then you just need to copy it and change it to the growth scenario. So at this point, Liz, you've hung in here for 2 hours, and so has the rest of the crew. We have literally just done this whole assignment. Now, that last part you might need to go and fill out yourself, unless you feel like you're close. I went back in and put in the 5% interest expense because that's what they had told me here. But whoops, they told me it was a 5% rate. But I hard coded it, and then you could either hard code the interest expense in here, or you could formalize it, which looks like I need to do that. I'm going to fix that formula to equal 5%, which is my interest expense. And then I need to make that 5%. I don't know why that's 4. And then I just need to, boom. Oopsies, I messed up. Oh, yeah. Okay, I think I'm good. And those numbers match to the numbers they told me here. So I'm in good shape. Okay. All right.
Okay.
So, all right. I mean, look, I think for everybody listening, just to repeat one last little baby time, and then you probably want to be done here. You build the right scenario one first. Use color coding. Mark the assumptions based on the case that are going to change. Think through how you're going to do dividends. That's going to put you through some challenging times. And then once you get the balance sheet balanced, copy, paste, and then adjust the scenario with the right assumptions. And that is model assignment number 3. Liz, you hopefully have made it through this part of the program.
Yeah, thank you so much.
Okay. All
You're
right, well,
awesome.
we're at time. I hope this is helpful. And Liz, I think the key thing, and I know we did this together, and I felt like you were following along and you were doing some good work.
Yeah.
So
Thank you.
my advice to you, and unless you're just exhausted with this thing, is just to kind of obviously do the extra scenarios and really think about why certain changes are making things happen. And then on Monday in our class, we're going to take this model, we're going to review all 4 of these assumptions, and we're going to start saying, hey, which decisions should this company make and why? So
Okay.
we'll start really diagnosing the model, but that's it for tonight, folks.
Awesome. Thank you so much.
No problem. Okay, everybody, have a good night.
Thank
Thanks,
you.
you too.
See ya.
Bye, guys.